everybody. Welcome back for another video. Hope you're all doing well and that you're all having a great day. And without any further ado, let's jump right into it. The last few days have been, it's actually been the last few weeks. If we can be completely honest with ourselves, the last few weeks have been incredibly intense for the market. For those of you, I don't know how anyone could have missed all the movements that we've been seeing, but now we have once again, because there's never any time to waste, we have entered into the next chapter as to where Bitcoin is going now that it did the other thing. So when you pass by your previous all-time high, regardless of any movements downward, which I told you were going to happen because it happens all the time, there's always people who believe that they're selling the news or trying to time the market, what have you. The next step is, where do we go from here? Every video I've relatively said something similar as far as we have not gotten to the halving. We're still around 5 or so weeks away. Yeah, I think it's around 5 weeks away at this point. And this is actually usually the time where the market tends to normally go completely insane. So the article is written a little weird, and you'll also see the time frames as well. I'll try and explain them if I can. I didn't write the original article nor the actual information that they're going off of, but the numbers here are like far too conservative, so I think I know what he meant to write. You'll see. On-chain analyst, his name is Willy Woo. We've spoken about him thousands of times. He's become a very popular figurehead within the cryptocurrency space, says that Bitcoin could hit $125,000 at a minimum this year if financial giants BlackRock and Fidelity allocate relatively conservative amounts of capital to the asset. This was more popular news around like 5 or 6 years ago. This is barely ever really spoken about anymore. A lot of the price news or price movements news for Bitcoin tends to revolve around monies being thrown into it. Here's how much money it is. Here's how much Bitcoin is now. The old news used to be actual percentages of allocation. So if you have a company, the way that companies tend to work is that they allocate 0.5% here, 1.5% here, maybe 3% there. It goes in batches like that. And a lot of the numbers that we had years ago were more along the lines of, if 1% of all the world's wealth were into Bitcoin, we'd have this number. If 7% of all the world's wealth were into crypto or into Bitcoin, we'd have this number. And this is where you get those like really insane 1 to 10 million and or $10 million plus price predictions. We do not hear as often anymore about the $100 million price prediction. If you've never heard of it, it literally kind of just basically means like every other currency has kind of collapsed except for Bitcoin, like every other one, like not like your altcoins don't exist anymore. Like everything is just revolving around Bitcoin. But now lightly, the conversation has revolved back around to the idea of like percentage allocation by a lot of these companies. Willy Woo told people on Twitter that if clients of the two firms decided to rotate 3% of their assets into Bitcoin, Bitcoin would easily hit $2.5 trillion as a market cap level. He says, and I quote, Bitcoin's price will go past 125,000 minimum before the end of 2025. That's the time frame that I was telling you about. I'm not a psychic man here, but we're probably going to $100,000 to $125,000 sometimes this year, because usually the frenzy begins after the halving has actually happened. So I can only assume him writing 2025 was a slip up, because we're probably going to realistically go to $200,000, $250,000, or $300,000 per coin by 2025. He said a minimum price of $125,000 just from BlackRock and Fidelity clients if they rotate 3% of their money into hashtag Bitcoin. He's saying that if only. This is the part that I need everyone to really get. I mean, I'm sure you'll get it. Like you're understanding the words that are coming out of my mouth. But it's more of a lot of times in crypto news, we are told to focus on one extreme thing and nothing else. So we will hear that a coin is doing exceptionally well and is like, well, Ethereum is only up in price because of this one thing that's currently happening right now, forgetting the metrics of it being the most used and largest blockchain that we have on the planet, all the other layers inside of it, all the other locked up coins, the deflationary nature. We tend to hear, well, this one event is happening and nothing else. A large portion of the narrative in the last, I want to say 4 weeks or so, has been driven by the idea that this is almost exclusively happening because of BlackRock. And you forget a lot of times that Fidelity is also there. And then you forget that the other companies are also accumulating Bitcoin as well. We have the news from MicroStrategy, who's always buying more Bitcoin. And then you also have a lot of people around the world who are also still buying Bitcoin themselves. There are tons of people, millions of people who are also allocating money to actually buy Bitcoin. Don't forget the actual whales who we continuously hear about as well. For those of you who have not been here, there are multiple, I don't know what they're called, on Twitter. These pages that literally like find new wallets that are activated, and they kind of compile data to see how many coins they're accumulating. How many new wallets are there per day? It's very important to know how many new people are getting into Bitcoin on a daily basis. If the number was 0, well, red flag, like there's a problem. But we hear that there's like several thousand every single day comparative to the billions of people in the world. So like the masses are learning, like it's continuing to increase the amount of people who are actually in the market. But a lot of times the news is simply BlackRock and Fidelity did X, Y, and Z. That's why Bitcoin's price is going up. See, even in this example, he's saying that Bitcoin's price is going to $125,000 if only BlackRock and Fidelity's clients put 3% of their money into Bitcoin. That's also forgetting the other 7 or 8 companies who also have Bitcoin ETFs. That's completely sweeping over the news that countries are also buying Bitcoin. So if we end up getting to 125,000 Bitcoin just based off of the merits of these 2 companies and their clients only allocating 3% of their portfolio, what happens for the other 900 companies who are also in the space? What happens is we continue to get news that MicroStrategy is buying hundreds of millions, literally, that's not a fake number, hundreds of millions of dollars worth of Bitcoin. What happens when you, your friends, and your family members are all buying more? What happens when we keep hearing that those the new wallets that are being created, there are a lot of them who are simply buying like 1 million Satoshis, which is, it's an ideal number. Then you also have news that these wallets are buying like on a daily basis 100 Bitcoin. Some of them are buying 300 Bitcoin daily. Like they've been doing it for months. So this is why I say like a lot of, first of all, in my mind, just based off of complete logic, Bitcoin should be well over $100,000. Purely based off of like the movement in the network, not even considering the actual allocation to the Bitcoin ETFs. Even $125,000 is like hyper conservative. Cool math, got it. But then you're also like, they're not the only players in this game. So where's the price going next year? That's what I think a lot of times, and I told you this before, I think a lot of times people get a little bit scared to say these numbers out loud. I have to sneeze and it won't come out. Oh, that's terrible. Sorry about that. I think people are usually afraid to say, well, yeah, Bitcoin's definitely going to $400,000, $500,000 per year. I'm not sure if it's simply because if it doesn't, maybe they'll feel like a failure and they have pyre in their face, or I'm not really sure what it is. But these numbers that we're seeing are completely out of control at this point. The allocation numbers once again, just for Fidelity and just for BlackRock and how much Bitcoin that they own. When you talk, you remember this was even before the ETFs got started. I don't have the article here because it just popped into my head. We had one day where there was like, there's always these emails and these PDFs that get sent out to like very wealthy clients of these banks and these institutions. And one of them leaked, air quotes, to us, and we were going over and discussing it. And I think inside of it, BlackRock was basically, I think they told their clients, like, what was it? It was some weird number. It was like a 10 to 15% allocation into Bitcoin was like the ideal number as far as like for risky assets. It was I forgot exactly how it was worded, but like I remember sitting here and being like, they told their customers to basically throw like a huge, gigantic portion of their portfolio into this market. The 3% number is significant in that it is normally seen as conservative. That is to say, from a 100% perspective of what your not, I want to say cryptocurrency wallet, from what your portfolio is, out of the 100% of everything, you typically would allocate 5% into this, 5% into that, 5% into this. You typically have around 20 different types of investments that all have a 5% allocation. This is usually the number that's thrown out there so that you make sure that should one market not do well, guess what? You're invested in 19 other things. That's how you make money and make sure that you're hedging your bets, if you will. So we typically will hear numbers, especially when it comes to cryptocurrencies. The number used to be half of 1% as an allocation to go into Bitcoin. And then that number moved to around 1%. And now we're seeing a lot of companies. It was also Cathie Wood who said a couple of months ago as well. She also suggested for her clients or someone like an over 10% allocation into Bitcoin. And these are the kind of numbers that really like get my like alarm bells going, because I'm like, you normally would not tell a client and first of all, like it worked. They released the news that their client should have a 10 to 15% allocation into Bitcoin when the price is 30,000 something, and then it hit 70,000. So like they were completely correct. And this is like what we hear in the news. Like this is what we're getting. Like this is what you're seeing on YouTube. Like none of us are present in any of the meetings like for BlackRock. Like we're not sitting there with these people singing Kumbaya, talking about like how much money to actually make. So when we get the idea out loud that this is how much money should be put into this asset class, we're not hearing like what these companies are actually doing, like the money that they're actually going to be throwing into it. It's just a really fascinating thing for me all the time when it comes to numbers. Recently, Fidelity's Canadian subsidiary revealed a 1 to 3% allocation to crypto assets in their Fidelity all-in-one Really? Fidelity in Canada has a fund that is called conservative. When you're conservative and not risky. In their conservative fund, they're allocating 1 to 3% of their money into crypto in a do you understand the irony? You would not ever allocate any money into crypto if you were trying to be conservative. Which currently has just under $200 million in assets under management. Bitwise CIO Matt Haugen commented on the ETF by saying Fidelity has a 1 to 3% Bitcoin allocation in their all-in-one asset allocation funds in Canada using spot Bitcoin ETFs. The conservative version is posted below. When and if this becomes the norm for portfolios in the US, wow. Like it literally like says the word wow, end quote. As I always say, it's a very interesting time to be in the market. I'm trying my darndest to be as patient as I can, waiting for this halving to actually happen, simply because I've been here before and I know what the madness actually ends up looking like. What's his name? It's not Willy Woo. Samson, is it Samson Mao? I want to say Samson Mao. Like a day or two ago, he posted on Twitter, and I thought it was the funniest thing in the entire world. He literally wrote exactly what I always say. He's like, do you see like we hit a brand new all-time high and we're still not at the halving yet? Like we're still not even there. So it kind of just completely boggles the mind to think exactly where we're going to be. 125,000 at this point is hyper conservative. When you talk about the levels of accumulation that we're seeing just from these companies, we haven't got, here we go. We haven't gotten to the halving, and we haven't gotten to like the public really rushing back into the market. I have a lot of friends, hello if you're watching, who lightly were on the sidelines, but were also slightly active in the market, but now they're like back in full force. I see them messaging me hello and asking me questions and stuff again, and it's like, yeah, like there's really big money to be made. So by next like 2025 summer, if we're not at 300 400,000, it's, in my mind, it's only because something really crazy has happened in the news. That's all I can, like, because besides that, like, everyone's hungry to make a lot of money. Yeah, that's the where the price is going news. Very excited to get to the halving. I don't want to rush time, but you understand what I'm saying. And yeah, let's move on. Also in very popular news, in addition to their recently added spot Bitcoin ETF, asset management firm Grayscale has a new staking fund. This is actually incredibly interesting because a lot more companies are going to be doing the same exact thing. A post on Twitter showed details of a newly launched crypto staking fund from Grayscale called Grayscale Dynamic Income Fund. Okay, according to the asset manager, this is the first actively managed investment product by Grayscale that is focused on multi-asset staking. The GDIF, their fund, is designed to facilitate the staking of digital assets to receive income. It says US dollars. Did you think they were... Some of the people who write these articles, man. A couple of months ago, like it hasn't been longer than a month now that I think about it, when we heard about the actual idea of there being spot Ethereum ETFs, the thing that stuck out to me most, a lot of people are very excited about the idea. As we've seen the price movements of Bitcoin from the spot Bitcoin ETFs, the idea is that when Ethereum has one or multiple, it will do the same. It'll really push up in price. Fantastic. The thing that got me is that I think two of the companies in their filings actually listed that they would have it was like a spot Ethereum staking ETF, essentially meaning that all the ether that would be accumulated by that company would be staked. So by holding a portion of the fund, any type of, bit that you bought, you would receive basically crypto dividends. You would receive staking from the actual fund that you actually held, which is incredible. That's literally the way that you get this to like spread like wildfire, is you tell people you may want to get into Ether or Ethereum. However, you may not be as comfortable going to Coinbase or going to Kraken or going to Binance to sign up. So cool, do it on your brokerage firm. You buy these things, and I wonder what the timing is of it as well. Because imagine you buy Microsoft stock and you buy Coca-Cola and you buy something else, and their dividends are coming in every 3-4 months. You're like, cool, I got to wait to get my dividends. Imagine you start buying some of this Grayscale Dynamic Income Fund and you get dividends once a week, once a month. Because realistically, a lot of these staking protocols tend to actually pay out daily, if not like weekly, what have you. So to see something like this is how you get crypto to go mainstream. Because you have something like this where like money is like, not only is the price rising for the asset, if the price would rise, but also there's money being made literally in the background. So as a company, you can say, well, not only did we help you, get the fund, but we're also managing it as well. So any money that ends up being made through staking, we only take as a company 3% of it. You get 97%, 97% more than you would have ever gotten if you didn't have this fund as well. Do you have 32 Ether? Well, you can't do it yourself then. So good luck trying to, it's this kind of mentality that all of this thing, you get what I'm saying. So this is probably going to be incredibly interesting. It says, as we've built our product family, We've only ever incorporated passive strategies. This week, that changes. Meet Grayscale Dynamic Income Fund, GDIF, our first actively managed investment product focused on multi-asset staking. Here's how it works. And then right here, I think they have the actual coins that they're allocating into proof of stake. Amazing. So they're using 9 different coins. And they are Aptos, Celestia, Seabeth, Coinbase staked Ethereum. I'll explain that in 1 second. Cosmos, Near, Osmosis, Polkadot, SEI, SEI Network, and Solana. Distribution of earnings would be every quarter. Oh, that's so boring. That's so boring. Oh, that's terrible. Grayscale. Okay, well, I mean, it's going to get people into the fund, but every quarter, I mean, I guess for taxation reasons, as a company, you divvying out dividends 52 times a year might be a bit much for their tax professionals. But if you've ever staked cryptocurrencies before, like, you can usually like get your money out. I mean, like, as far as like the payout, some coins are daily and or like once a week. But of course, Grayscale has to make it. Anyway, the idea of the coin is called Seabeth. Terrible name. It's Coinbase staked Ethereum. When you stake your Ether into the protocol, it's meant to stay there. So a lot of people tried to talk down about it before, but it makes a lot of logical sense. If you don't have tens of thousands of millions of computers doing proof of work in a warehouse to mine Ether, you have to find a new way to do it. And the way is by proof of stake. So basically, you show that you have coins and you stake them on the network. They kind of get locked up. I was thinking of like an alien movie where they go cup, 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 where like it eats it. I don't know why I thought that, but imagine like you put your coins into the network and they kind of stay there. The issue is that people are very fickle and people get terrified very easily. So if at any point there was a hiccup on the network, Ethereum, if there was a problem with some decentralized exchange, or if Coinbase had a problem. We've seen all these things before. People get terrified and they move their coins very quickly from these protocols, from these websites, and everyone goes on the Twitter and begins to panic. The problem is that you staking your coins into the network is the equivalent of having tens of thousands of machines mining the coins. So imagine if there was a problem on Coinbase, of which there have been many recently, and everyone got scared and unplugged all of their machines mining Bitcoin. Bitcoin would literally collapse. So to stop this from happening, there's actually a queue, a line that you stand in when you want to get your coins out. It's to prevent everyone from taking their coins out at the exact same time. So I think 2 years ago, people were like, this is a terrible system. I want to take my coins out. It's my coins, my freedom. And it's like, well, go do it somewhere else. You don't understand the actual, like, this is how you support and keep the network safe. It's literally like the whole protocol has changed and you're staking your coins inside of it. If you and your grandmother get scared one day and take your coins out and then the network begins to like fall apart and fail because there's not enough security and your money goes down, well, guess what? It's you and your friends that did it. So a lot of cryptocurrency exchanges understand that people want their money a lot quicker. So what they do is they basically offer like a liquid version of the money that you would have gotten from your staked coins. And one of them is called Coinbase staked Ethereum. Some of them are called liquid ETH. I usually call it liquid Ether because it's a lot easier than saying Seabeth Coinbase staked Ethereum, where basically the money that you would get is paid out in a new coin called Coinbase staked Ethereum that you can then swap for US dollars. It is the literal equivalent of the money that you would have gotten as well. So we're definitely going to be hearing a lot more of this over the course of the next couple of, dare I say, years. It is an incredibly attractive investment opportunity that they've actually created. This is not me telling you to go and get the Grayscale Dynamic Income Fund. It's more of a, companies are going to have this in the future. It's going to be like, the idea of staking is already the future of what dividend payments are going to be like. Like they're so popular in the cryptocurrency space because they are far more frequent. While the idea of getting a paycheck every 3 to 4 months is like, whoa, amazing, people want their money a lot quicker. So when you start having other funds, or if we do actually end up getting a slew of Ethereum ETFs floating around out there, and other companies begin to jump onto the ship as well, and also just even like more like what do you call it? Like staking pools and stuff out there. This is going like, can we be honest? And I said this to someone before, and I couldn't roll my eyes enough. Like, it was physically impossible for me to do so. I was chatting with someone before, and we were talking about forms of passive income because they literally work hard for their money. They have like 2 or 3 jobs, this friend. And I was like, have you thought about doing, investing so you get money passively, so that in the future, you won't have to rely as much, on having 3 jobs. And they looked at me and they were like, no, like, it's okay. Like I like working. And then I was like, no one likes working. And they were like, I do. I really like working. And I once again, mathematically, I'm sure there's 1 to 3 people listening to this right now who like working. I'm going to talk to the other 99.99% of people who don't, who are listening to this right now. Like, this portion's for you. No, do you like working? I should have made that the question of the day. I wasn't even thinking. I didn't know that there were people who liked to work. And maybe it's because you found like the job of your dreams. This is what I've always wanted. Like, you always wanted to do this one job, and I'm happy doing it for the next 40 years. I don't, besides that one person, I've never met anyone who's like, oh my gosh, I love waking up at 6 o'clock to go to my job. Like, it is the best. Customers, what? I love serving them. When she threw the drink in my face, it was just a lot of fun. So I mentioned this years ago as well. Like, when we first were getting staking coins, I was like, this is going to be the future. This is going to be the thing. And this is why we saw a huge, heavy amount of accumulation for Cardano and also for Ether around like a year or 2 ago. People want dividends and they want to be able to stake. They want to be able to like wake up and see that they've made a couple $100 from doing absolute jack diddly squat so that they can go about their day and do stuff that they actually love. Once again, not talking to the 1 to 3 people out there, because I'm sure somebody was like, I love my job, and I'm happy for you. I'm literally like, bless you. Like, that's completely insane that you found something that you love that pays you, that you can do for a long time. However, I'm not one of those people. I need to like, no, that's not it at all. Yeah, bit of a weird ending, but I think that's gonna do it for this video. I do sincerely hope that you've all enjoyed. We'll see what ends up happening with any of these altcoins. A lot of these coins, not the most popular. Aptos, Celestia, Osmosis. Thank you all once again for watching, listening, liking, commenting, and or supporting. And I will most certainly be talking to you all soon. See you.